Hello. I'm George from Corrido.eu. The topic of today's video is discovering the risks of money laundering for money service businesses. This video provides valuable insights into how money service businesses can protect themselves from fraud and costly penalties across various countries. What is a money service business? A money service business is a non-bank financial institution that transfers, converts, or exchanges currency. Depending on the jurisdiction, such businesses may also be known as money transfer businesses, money transfer dealers, or remittance service providers. Money service businesses can be either companies or individuals offering a range of financial services, including but not limited to money transfers, currency exchange, remittance services, cashing of checks, money orders, or stored value cards, and payment services like tax or utility payments. Money service businesses are considered particularly vulnerable to the risks of money laundering due to various factors. Firstly, they often deal in cash and various types of money transfers, which can be challenging to trace and regulate. Secondly, they may involve third parties and intermediaries, increasing the potential for illicit activities. Thirdly, the increasing use of digital platforms has opened up new avenues for money laundering. Additionally, customer anonymity and using undisclosed sources of funds further exacerbate the risks associated with money service businesses. To combat these risks, money service businesses must comply with various regulatory frameworks and adhere to anti-money laundering regulations to ensure they are not exploited for criminal purposes. Money service businesses are therefore at risk of being used as a conduit for illicit financial activities, which could have serious consequences for the financial system and the broader economy. As such, money service businesses must comply with relevant regulations and implement robust anti-money laundering measures to prevent criminals from abusing their services. Let's talk about how to regulate money service businesses based on various countries' regulations. The United States. In the United States, money service businesses are subject to the regulatory oversight of the Financial Crimes Enforcement Network under the Bank Secrecy Act. As such, money service businesses must register with Financial Crimes Enforcement Network and comply with a range of regulatory requirements, including developing and implementing an anti-money laundering program and reporting currency transactions over a certain threshold, and filing suspicious activity reports where necessary. The United Kingdom. In the United Kingdom, money service businesses are subject to the money laundering regulations and must register with the country's tax authority, Her Majesty's Revenue and Customs. Money service businesses must conduct risk assessments, establish an effective anti-money laundering program, and appoint a designated officer to oversee compliance with regulations. The Her Majesty's Revenue and Customs also requires money service businesses to perform due diligence on their customers and monitor their transactions for suspicious activities. Canada. Money service businesses must register with the Financial Transactions and Reports Analysis Centre of Canada and report certain transactions, suspicious activities, and terrorist property. Companies can check if they must register with the Financial Transactions and Reports Analysis Centre of Canada on its website. Non-compliance with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act may result in significant penalties, including fines of up to $2 million Canadian and/or up to 5 years imprisonment. Hong Kong. In Hong Kong, individuals or businesses intending to operate money services must apply for a license from the Customs and Excise Department under the Anti-Money Laundering and Counter-Terrorist Financing Ordinance. The licensing process involves a fit and proper test, and the applicant must demonstrate that they have appropriate systems and controls in place to manage money laundering or terrorist financing risks. Failure to obtain a license may result in fines of up to 100,000 Hong Kong dollar and imprisonment for up to 6 months. Singapore. Money service businesses in Singapore are subject to the oversight of the Monetary Authority of Singapore. To operate a payment service in Singapore, businesses must apply for one of 3 licenses from the Monetary Authority of Singapore: a money-changing license, a standard payment institution license, or a major payment institution license under Section 6 of the Singapore Payment Services Act 2019. Australia. In Australia, businesses that accept instructions from clients to transfer money or property to a recipient are considered remittance service providers, or money service businesses, and must register with the Australian Transaction Reports and Analysis Centre in accordance with local anti-money laundering regulations. Failure to comply may result in significant fines. For more guidance and advice, you may reach our team at corrido.eu.